242. Hello, everybody. Welcome to another episode of the Petrodollar Pedro Show. This is episode number 12, entitled Using the Silver and Gold Miners as Bellwethers for the Sector. So this will be a relatively quick video. You can see I've got Equinox Gold Corp, Hecla Mining Company, and Sandstorm Gold pulled up on Yahoo Finance. Why? Well, I use these three companies as a triangle bellwether for what's going on in the sector, and why I will now explain. Equinox Gold Corp is run by Ross Beatty, who's affectionately known as the broken slot machine by his investors and people in the gold and silver and general mining industry, because almost everything he touches makes money. So I like to use his companies, especially his newer companies, as a gauge for risk appetite, because almost everyone clamors to hand this guy money. So you can see here, Equinox Gold Corp is actually down quite a bit off of its high, roughly, let's see, about 3 years ago maybe. So it's sitting at $3 and roughly, 50 cents, 55 cents on the chart, right? Well, why did this happen? This happened right here because people saw that inflation was going to happen. And so the people who understood that inflation is going to come flying into the market flew into gold stocks. Why? Because that's how you get leverage to inflation, because it is a natural inflation hedge, though some try to say it's not. I understand why. I understand the arguments. However, they're a little short-sighted, if you will. And the gold and silver mining stocks are a way for you to get torque inside of your fiat portfolio, right? And so that's what most people are trying to do, get torque inside of their fiat portfolio. So that's why people came into Equinox Gold. Ross Beatty, the broken slot machine, made people a lot of money. Now, if you sold up here and you bought back in here, you made a killing and you got pretty much triple what you had in shares, and hopefully some profit. So I like to use this kind of company, if you will, as a way to see how players are playing them. Bigger players, I should say, are playing the market. So that's Equinox Gold Corp. You can see the torque that it had to the inflation spike, and now you're seeing that it's grinding actually rather stably down. So that's Equinox Gold Corp. That's one part of the bellwether. Let's go to Hecla Mining. Why do I use Hecla Mining? Because they are a very old company, over 100 years old. They've had many different types and styles of management, but they are a company that knows how to run a mine, and run a mine in good or bad times. That's why they're still around. But if you look at their 5-year chart, they were really getting just beat up for quite a number of years, and bottomed out at about $1.82, and since then have been experiencing quite a number of spikes, all the way up to $9. And that shows you how much torque one of these puppies has. And it's since then stabilized at around the 550, 560 mark. So this is a great company to understand kind of what the large silver miners are doing, and it's a great way to gauge the appetite that larger investors have, because larger investors tend to buy the more liquid and the more stable companies like Hecla or like Equinox. So now let's come over here to Sandstorm Gold, and I like to use this company as a bellwether in a different way. They're a financial provider in essence to miners, right? And so they also get their streams returned in either fiat or streams and royalties in either fiat or actual metals, right? And so this gives you an idea of what one of the more stable sectors of the silver and gold miners, pardon me, is doing. And so you can see that Sandstorm Gold participated in the run up, the spike up in inflation, but has since, just like these guys, ground down rather stably, although had some rather impressive spikes along the way that could have been played for profit. But what I like to use these guys for is large investors want the most security they can find in an equity when they're truly trying to actually generate torque in a portfolio, right, and get returns. Well, Sandstorm is going to be one of those companies that they're just going to jump in, feet first, holding their nose. And it will be one of those equities that will give you an idea of what's going on and how fast, because it'll move really quickly. It's very liquid. And it's technically a financial company, but in the gold and silver and general mining sphere. So it's a great bellwether for you to understand kind of what people see, if you will, as the risk reward for a stable company like that in the sector. And you can see that the stock price has really made some rather solid gains. It doesn't really look like it, but if you actually look, they're fairly solid gains. They're grinding slowly upward. Same rather with Hecla. Equinox has actually made a lower low than 5 years ago, but Equinox is also a newer company and it's run by Ross Beatty, so it'd be hard to imagine that it's going to stay at the $3 handle if gold puts on performance. And it will be moving from a $3 handle, $3.50 some odd cents handle, probably to multiples of that. So one thing I wanted to draw everybody's attention to was that the volume at the end of all of these charts looks the exact same. It falls off a complete cliff. Look, falls off a complete cliff and falls off a complete cliff. So what I believe that signals is risk appetite has left the market in terms of retail investors. I believe that are now mainly seeing stable, diamond-handed, if you will, investors like Rick Rule and Eric Sprott and Guggenheim and some of the larger funds out there are getting ready. They're gearing up. They don't want to make their move yet. They're all in cash, if I had to guess. And if you see a sudden spike in volume and price in Equinox, Hecla, and Sandstorm all at once, you'll kind of know that the whales are moving. They're making their move. And if you were to see, for example, a spike down somehow in the futures for gold and silver, but equities were moving up, it most likely means that the institutional investors see retail capitulation and they know they can buy up the market with almost zero resistance and then force retail to chase, making their profit all the way up against the retail market. This is usually how it runs. So these are kind of my bellwethers for when that will occur, because many of these large companies need returns and they're not going to find it where they are traditionally used to finding it. They're going to come here. So Equinox Gold, Hecla Mining, Sandstorm Gold, these three are Pedro's personal bellwethers when he's looking at his portfolio, when he's looking at timing, when he's looking at what large retail investors are, large institutional investors are doing. So hopefully I shared some interesting data with you. We talked about the fact that the general stock prices have finished actually somewhat higher, minus Equinox Gold being the newer company. But between these three, their charts, their volume charts at the end look the exact same. So it looks like retail has completely left the market, which means that I believe institutional can now begin to move in and absolutely gobble up the shares. And as Rick Rule would say, sometimes things are cheap enough. And I think that's what we see right now. Things are cheap enough. All right, everybody. Well, I wanted to share some data with you. Keep an eye on these companies. Keep an eye on the volume and the price. Take a look at what gold and silver futures and the prices are doing against the equities. It's kind of another way you can gauge what the big players are doing and what they think the future for gold and silver is. So be physically responsible, be spiritually responsible, take radical self-responsibility, put a smile on someone's face today if you can. And as Greg Manarino would say, be charitable and be kind to one another. We need each other more than ever. So, hey, thank you for being here with me. I hope I shared something interesting with you. And with that said, Petrodollar Pedro is out.